Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Thursday, October 2, 2014. Okay, so here you're looking at a daily chart of the SPY, and it was pretty interesting because I think in last night's video, I'm pretty sure that I kind of depicted exactly what happened today was likely to happen. So let's review what happened. Let's go over to the hourly chart, all right? And what happened today, let's get today. Here we go. We start today, okay? And we open up. We went up a little bit, and then we started down. And we started down, and then we made a low, and I want to show you where we made the low. Then we bounced back up, and I just want to show you where this low was made. Okay. Now, if you remember, we had a 194.50 to 195, 194.75 in that neighborhood, okay? So that was here from yesterday, okay? And yesterday we closed at 194.35, okay? Whoops. And today we went down to the next level I gave you. I think I gave you this level 192.93. I think I said 192.94. Okay, it was this pivot low. Okay, so we came down to this pivot low, pierced it for about a minute, and then we bounced back up, and then we rallied back to the even line the rest of the day. Now, under normal circumstances, you could make a case that this was a reversal day. Okay, you had good volume. Okay, you had 157 million shares. All right. You have what looks like a bottoming tail, but it's not at a low in the chart, so it really doesn't hold all that much water. It's something, but it's not everything. The other thing is October is going to be choppy. There's going to be more downside, and markets love to go test their lows once they've just made them. So whether that's tomorrow or whether we do get a few days of a slight bounce or a rally, maybe we even get up to the 50 moving average. And if you look, let's check out what might happen. Okay, so let's put in a Fibonacci retracement from our high to our low. I'm having trouble with this. I've had trouble with this for a while. Okay, I'm going to fix it right now. I'm sorry, folks. I just want to fix it. So the high is 201.85. Okay, so I'm just going to fix the number here. 201.85. We'll apply that there. And the low we want to put in is 192.35. Okay, 192.35. 192.35. There we go. Okay. So your first level of resistance, what you did was you really came back to the 2.5 retrace today. Okay, your next level of resistance, I know this is going the opposite way, but just call this the 382 retracement. Okay. In fact, I can do this on the 60-minute. Might be easier to see. Okay. Let's try it. Let's see if it works. If not, I'll just leave it alone. And then I'll show you by eyeballing it where it's going to be. Yeah, this is giving me problems. I got to get this fixed. All right, I'm sorry, folks. Let me get this out of here. All right. So your ultimate level of resistance, if this market were to bounce right now and give you a solid 2, 3, 4 days of a rally, okay, it's going to go to this gap window here. The high is 196.77, so that's going to be a tough level to get through. You had huge volume that day, okay? I'm sorry, this is the 60-minute again. All right, I'm sorry, folks. Let me reel back the tape. Okay, so where are you going to go? You're going to go up to the 50 moving average is probably your top side, unless we get through there and close above it, and then we'll reassess. But right now, I'm not going to look for anything really above this 50-period moving average, right about, call it 197.5, because it'll be moving down for a couple days, and it'll come down into that number. So the other thing is, you can come tomorrow, you can flounder around, you can try and retest these lows, and if you come and break these lows, then you're going to come down to this double bottom here. It's pretty much that simple. 195.5, give or take. Okay, if you test the lows and you don't close below the low, and you reverse, then you'll probably put in a rally next week. But you have the jobs number tomorrow, and you have the Friday typically is a light volume day, and typically the market will finish mainly around the flat line to slightly positive on Friday. So that's what we have. We kind of had the first leg of what I was looking for, but don't call it a reversal yet because we're not out of the woods. There's going to be a lot of stuff going on in October. You have earnings starting in the middle of the month. You have a solar eclipse. You have 2 eclipses. And so those are meaningful to the market. They usually signify turning points. And I'll let you know as we get closer to those. So we just need to be careful. But today we hit target prices. Okay, so that's important. So we'll see what happens. Now we take it one day at a time and we go from there. Do we want to look at the IWM? Is there much to look at the IWM? It did it pretty much exactly what I said it was going to do also. This one will flip over to the weekly chart because that's where it's more pronounced. And we came down to this low here, pierced it a little bit, right? This pivot low. We pierced it just by a few pennies, and we reversed back up, okay? Nice day in the IWM. But, don't call it a reversal day yet because this market could be dangerous, okay? One slip up and this market could go down 2, 3, 4% in one day. So just be careful out there. But certainly a lot of stuff is oversold, and specifically you had the energy sector. Oil went down to a low of... I think of around, you know what, I'm going to get you the number because I'm looking at another chart and another screen, and the crude price went down today to 88.59. No, I'm sorry, 88.18. 88.18. So I was looking for mid-80s. Remember I said 85, give or take $1, so it missed it by at least 2. I don't love that. That number's pretty good. So I think there's probably more downside to oil. Only you might as well let's just flip over to the USO because I can't get the crude chart on this platform that you're seeing. The USO went down today with the price of oil, of course, and then it bounced up. But there's nothing good here. This is just in a downtrend. So again, you might get up to the 50-period moving average. Or the 200-period moving average, and you probably stall out. So that's what I see. I think there's more downside to oil. I'm going to kind of stick with that business case. Let's go over to gold. All right. Gold didn't do anything today. Your GLD was down 3 pennies today. Gold is stuck in the mud. I'm looking after hours, and you're down about another $3 after hours, 212 and change on the gold futures contract. It's just not good. It doesn't look good. I mean, if you don't get a bounce here pretty soon, you're not going to get one. So be careful with gold. What else do we want to look at? You know what? Let's leave it short and sweet tonight. I know I've been long in the tooth in the previous few videos. So I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.